let's talk about the exodus of both, I guess, expats and locals when it comes to the B&O visa, of course, to the UK. But talk to us. We have a story today on the Bloomberg talking about how it's become a renter's market in Hong Kong. Your research, what does it tell you on direction of rents here in the city moving forward?
Yeah, I think that is a very interesting scenario right now with the divergence between the rents versus the prices. You see the price still going up in Hong Kong. It's up 4% year to date, pretty strong momentum, versus the rents actually come down a bit, like last year already 6%. And I think the vacancy rate keep going up. Our research showing that the potential risk of high vacancy in Hong Kong, it could be going to an 18-year high level to 5.4% this year, so versus like 4.3% in 2020. So basically, we could see the rents could come down a little bit further, say like 5% another this year versus like last year already dropped 6%. So I think the problem is that the vacancy rate in Hong Kong is still getting higher. So it's a bit challenging situation for leasing market right now. So it's good for tenants.
Right, and you guys have actually modeled this, and you have several scenarios when it comes to the vacancy rate as a function of people leaving. So not just the expats. I'm going to bring in the B&O visa here to the UK. So locals also leaving. What are your assumptions? Talk us through these scenarios.
Yeah, I think the assumptions here is that because we have the UK Home Office forecast on the B&O visa application, so we apply those numbers there, and plus we have the proportion of households living in a private unit, and also we take into account the home ownership rate in Hong Kong. So basically, we have the assumptions here that we come up with the numbers that 16,300 households currently living in a self-occupied private home units could leave Hong Kong and move to the UK or sell their homes in Hong Kong, whatever. But of course, it also depends on lots of uncertainties, right? Whether they will all sell the homes, and also whether they need to repay the mortgage. So that's why we come up with the maximum outflow number, 150 billion. But this is definitely an extreme case. In reality, it could be less. So that is something that we need to bear in mind. So, but actual outflow is not that much. So again, I think the prices still trending up quite nicely year to date in Hong Kong.
And let's look at the other side of the equation. What could then maybe replace that source of demand moving forward? Talk to us about prices and the source of that demand.
Yeah, I think the overall situation right now is that we see really strong momentum in terms of the liquidity. The 1 month HIBOR currently is only 0.09%. That's a decade low level. We also have the mortgage insurance program supported demand, all right? That is support the permanent residents in Hong Kong. They can just pay 20% down payment to buy something 10 million Hong Kong. So this is a fundamental, very strong demand in Hong Kong. With I think the social stability in Hong Kong also help, right? We don't see any protests here anymore. So basically, it also support the end user demand to buying properties, and also some investor demand as well. Versus yes, there are also some people moving out to Hong Kong, but at the end, I think we see actually the buyers is more than the sellers in the market. So that's why the price still going up. Even we see the secondary home demand is very strong. It's now the sale is 50 billion in April. That is the highest level since 1997.
Right.
So it's quite amazing.
And for new projects, right? Maybe anecdotally, people still are literally lining up around the block, lottery system almost, right, to be able to just get the right to buy it, and that's not even guaranteed. Very quickly, as a final question, Patrick, here. So you talked about vacancies. Let's look at what that means for office space, commercial space here in Hong Kong. What is your research telling you?
Yeah, I think the vacancy rate for the office is much higher than residential, actually. We see the latest number is 10% vacancy in Hong Kong. It's so high, it's highest over the past 20 years, I would say. The challenge, I think, for office is more about allow people work from home, and also we see some major banks, they also cutting down the space here. They moving to a more flexible working environment, and this is a little bit challenging for office, I would say. The office rent still coming down, but I think for central district, it may be a bit better moving to the second half of this year. We see the rental gap between the central versus other suburban districts or Kowloon East, whatever. I think it's a little bit layering. So it also help bring up some centralized demand. And also, I think the cross-border reopening. Hopefully, we'll see more activities between mainland China and Hong Kong in the second half. This will also bring up more demand from the mainland Chinese corporates. This is also a very key driver for the central office leasing.